Mastering Spot Foreign Exchange. Navigating Society to Discovering Profits. Publishing. December 2024. For traders. My apologies in advance if the content shines light on frustration you may have with your trading mentor. You'll quickly realize that almost everything pitched to you is flooded with ignorance. If you find value in this video, consider a like, share, and comment. For those who do, I'll put you on a path of success. Learning to trade isn't some magical formula. You're not going to hit a home run the first time at bat. Certainly you'll tumble off your skateboard or pop a tire or two on your bike. The point is, you have to practice. Practice makes perfect, right? Actually, it's perfect practice that makes perfect. 95% of traders practice faulty habits, instilling toxic methods that must be eliminated. The most important component is the one that traders understand the least: value. When you understand the importance of value and cross-border capital flows, you then have something intelligently resilient. Sadly, most everything else is in vain, and here's why. Let's take a walk through the retail trader's experience. You read all the books you can find on the subject. You watch hundreds of hours on technical analysis, price action, and how to use the countless number of indicators. You've done it all, or so you think. Heck, you even set yourself up with a high-powered trading computer. There's no doubt you're ready, and you fall off the wagon. Your first day of trading was a disaster. You realize trading forex isn't easy. In fact, FX is the most complex market in the world. But why? We'll get to that. Patience. Frequently, I write not in the abstract but on topic with foundational knowledge. Yet, as much as traders want to profit, they are afraid of putting the time in to understand the market's complexities. Their weakness is going to the charts before gaining true knowledge. You don't know it yet, but you fell off the wagon when you immediately went to the charts. Going to the charts before even a foundational premise on value is single-handedly the worst thing you could do for your trading career. Yet, when you understand value, the rest is elementary. So what do I mean by value? Aren't exchange rates value? They are not. To define value, we must first consider some given facts. Foreign exchange is a zero-sum game. There are winners and losers. The winners accumulate the same value of those who lost value. Now, in the context of currencies, this means that all currencies in the aggregate maintain a near constant sum of all values. Value as a whole is not lost, but simply transferred to a new owner through the settlement of profits and losses. The currency market is a vast and interconnected market of exchange. Currency values determine exchange rates. We trade currencies among one another, but the exchange rate is merely the mechanism of settlement, but not the instrument. Here's the exciting part. Instead of trying to dissect the charts through a painful experience, understand how to determine value and lead the market at every turn, just like the bankers. How does value lead price? For perspective, here is some microstructure. Price action is the lagging structure of price movement. Price movement is caused by volumes, either bullish or bearish. Aggressive volumes then cause rate movement when perceived value provides banks opportunity for profits without significant risk. Consider the value versus the rate. The value is the perceived value, or more succinctly, the expected rate in the near future. Real value leads the exchange rates based upon expectations that the banks of the world have on exchange rates and yield. Value. The single most important component for a trader's price discovery mechanism. How do you determine value? So with our focus upon the values of currencies and not exchange rates, we can extrapolate directional influences quite easily. This provides us not just market transparency, but knowledge of how, why, and when exchange rates move in the granular view. Everything is determined by value, everything. But you ignored the value and went right to the charts. The problem this creates is the reason why banks have been able to abscond with your capital and why forex brokers are able to operate like casinos without limitation. Consider this as you engage your next prop fund challenge. So what do we use to determine value? Without getting into the details of how, all exchange rates are used to determine value. Mind you, this isn't the charts, but just the rates with value extrapolated. Precisely, value is the result of cross rates and aggressive volume as it influences parity. Exchange rates in their individual significance are not an independent being. They are reliant and responsive to other rates and the values of currencies. This is the market, a complete picture, or in other words, 100% of it. When you went rogue, you hit the ground and kicked up some dust, but in doing so, you also eliminated 90% of the market, assuming you trade the euro-dollar pairing. It's just 8 to 12% of data the market provides. The extraction of the bigger picture gives you an immediate 90% chance of loss. Put it this way, by eliminating analysis on the whole market, you've put your path on a rocky climb. While this video may have been a significant revelation in support of your trading journey, it's just 1% of my research over the last 32 years. Join me on itrade.social and I'll show you path to the inside view. It's not just a trading community. It's a revolution